Hi, my name is Dylan Locke, and I am the production accountant for Gemstar Productions, and today I will be sharing our accounting overview with you. The first thing we'll look at is the balance sheet. A balance sheet is a financial statement that illustrates a company's assets, liabilities, and stockholder equity accounts for a specified period of time. Essentially, a balance sheet will show what the company owns, what it owes, and the total investments at any given time. Today I will be going over the balance sheet for Gemstar Productions as you see here. As I previously stated, this includes the three accounts: assets, liabilities, and equity. The first account is assets. The first number in our assets account is cash, which sits at $49,280. This number reflects the monetary amount that Gemstar has after we took out our bank loan, received our profits, paid our expenses, and so forth. The next item is our supplies inventory. This represents our current stock of supplies, such as our office supplies that are being used to help make a profit for the company, which makes it an asset. Currently, we are sitting at $1,333 of our original $2,000 as we have used $667 worth of our supplies. The next asset we have is our company vehicle, which we purchased to move supplies back and forth for events. We originally purchased the vehicle for $14,250, but we have deducted the depreciation value of $297 for the month, which leaves us at the amount of $13,953 shown. The next number we see listed as a deposit at vendor for $500. This number simply represents the $500 we paid to Soundstage for next month for the use of their property for our event. Since this value is paid for a future use, it is considered an asset for us. The final number on this account is the total of all of our assets combined, which came out to $65,066. Let's move on to our next account, which is our liabilities, or what we owe. The first number we see is the loan payable amount for $40,000. This number represents the amount that we initially took out as a bank loan. The next number in our liabilities account is the $233 listed under interest payable. This represents the interest we paid for the month on the bank loan. The final account on our balance sheet is our shareholders' equity account. This account shows the amount that deals with the shareholders have invested in our company. The first number in our equity account is for $20,000 and is listed under common stock. This number represents the monetary value of the stock that was bought by our company's president this month. The next number is our retained earnings of $4,833. Our retained earnings represent the total amount we have after we paid our dividends to our shareholders for the month, and then this becomes useful in future shareholders' equity as the amount continues to accumulate over time. Adding the total number of common stock and retained earnings brings us to our total for the equity account to $24,833. The last number we have at the bottom represents the total of our liability account, which sits at $40,233, and our equity account, which sits at $24,833, for a grand total of $65,066. And this rounds out our balance sheet. The next thing we'll look at are the three important ratios for our company. These are debt to asset ratio, the return on assets, and the return on equity. The first is our debt to asset ratio, which comes in at 61.8%. This number is used to compare how stable our company is compared with other similar companies by taking the total debts and dividing it by total assets. In this case, we have $40,233 worth of total liabilities that we will divide by the $65,066 of total assets, which gives us a number of 0.618 or 61.8%. This percentage shows how much debt our company owes when compared to the assets we own. Essentially, it shows what percentage of assets we would have to sell to pay off our debts. Next, we have our return on assets, which is 7.4%. This number reflects the efficiency of the company. The ratio is calculated by taking the net income of our company and dividing it by total assets. In this case, we take our net income of $4,833 from our profit and loss statement, which we will cover here shortly, and divide it by our total assets, which again is $65,066, which gives us 0.074 or 7.4%. This number represents how well we are using our resources to remain profitable. Finally, we have our return on equity, which is currently at 19.5%. This number is found by taking our net income and dividing it by shareholders' equity. In this case, we again take our net income of $4,833 and divide it by our shareholders' equity, which is $24,833, which gives us the number of 0.195 or 19.5%. This number is useful to investors as it shows them how well their investment is doing in our company. The next financial statement we will look at is the profit and loss statement. This is a detailed document that shows us our revenue, cost, and expenses for the month. As you can see, we have our budgeted amounts, our actual amounts, and the variances caused by the differences in these two. So let's look what happened. The first number we see is our event revenue, which is self-explanatory. We estimated that we were going to make about $11,800, but we came up $400 short at $11,400. While this was close to what we estimated, we did not have quite the turnout that we initially anticipated, which caused us to fall short. Now let's dive into our expenses, or what we spent. Again, you can see we have our budgeted amount for each category, what we spent, and the variances between the two. The first expense we have is our utility expense. This covered the lights, water, and waste used for the event. We had budgeted $275, but only ended up needing $220 to cover this cost due to our event running 30 minutes shorter than we had originally planned. And this saved us $55 in utilities. Next, we have our payroll expense, or what we paid our employees for the event. Unfortunately, we needed to hire a few extra people to handle the amount of work we needed done, so we went over our budgeted amount of $2,800 by $400 and ended up spending a total of $3,200 for payroll. Next, we have our depreciation expense for our company vehicle. We had expected our vehicle's value to drop by $345 for the first month, but it only went down by $297, which saved us a total of $48 on our asset. Unfortunately, the opposite is true for our interest expense. We had only budgeted $150 to be used to pay our interest for the month, when it came out to be $233, which caused a variance of $80 that we did not expect to spend. The next item we have is our office supplies expense, or how much of our office supplies inventory that we had used. We thought we were going to use $725 worth, when in reality we only used $667 worth, which means we saved $58 and used less supplies than we originally anticipated. The next is our insurance expense, which is the amount we paid for liability insurance to Allstate. We anticipated spending $1,000 here, but we went over by $200 and ended up spending $1,200. The final piece, and arguably our best outcome so far, is our equipment rental expense, which covers the amount spent on equipment rentals for the event. We went into the event thinking we would spend $1,000 on equipment, but in total we ended up getting a discount of $250 on our equipment and managed to only spend $750. In the next line, we can see that we had budgeted for $6,295 to cover all of our expenses, but in total we ended up spending $6,567, which would put us over budget by $272. Our final line shows us our actual net income versus what we thought our net income would be. Unfortunately, we came in under our expected by $667. We had anticipated making $5,500 in net income, but we only ended up with $4,833. The final financial statement we will examine is the statement of cash flows. This statement shows the flow of cash in and out of the company. It consists of the accounts for operating activities, investing activities, and financing activities. This is important as it directly correlates with the overall health of the company. The first section covers operating activities and the cash flows associated with them. Operating activities refer to the part of the business that goes into providing goods or services that they set out to do. In our case, that would be everything we use to put into our events. To save time, I will cover one part for this section and future sections. So let's take a look at our venue deposit, which is showing a value of negative $500. This is because we spent $500 of our own money to reserve the soundstage for an event. In all, we ended up with $4,653.12 of cash flow into our company. The next section is our investing activities. This covers the cash made or spent based on investments made for the company. In this section, we will highlight the negative $14,250, which represents what we spent on our company vehicle. This amount, with the addition of the accumulated depreciation of the vehicle, brings the net total cash for this section to negative $13,953. Our final section on this financial statement is our financing activities. This section deals with cash used for funding the company. The two parts of this section include the initial loan we took out for $40,000 and the $20,000 worth of common stock that was bought by our company's president. Since both add to our total cash in the company, They are both represented by positive numbers in the statement. When these amounts are added together, we get the net cash flow of $60,000. The final line in the statement is a result of the addition of the three net totals for each activity section. By adding the $4,653.12 from the operating activities, the negative $13,953.12 from investing activities, and the $60,000 from the financing activities, we come up with a grand total of $50,700 of cash flow into the company for the time period. To wrap this up, I would like to present 5 internal controls that I believe would be beneficial for the company. The first is segregation of duties. This control will be a segregation of duties when it comes to writing checks for the company. The accountant will be responsible for writing the check, and it will then require a senior manager and owner of the company to sign the check. This will prevent inaccurate checks and/or fraud, as multiple checks will have to be made for checks are sent out. This will be easy to determine if it is enforced, as the owner will be able to make sure that checks are written and signed by different people and then physically sign off as the final check. The second is stringent documentation. This control will have to do with the stringency with documentation. All transactions will be required to have supporting documentation that proves its accuracy. This could include documentation such as receipts. The final part of this control will require approval by a manager, designee, or higher up. This will prevent any transactions from being approved inaccurately and will also be very helpful in providing auditors with accurate information and supporting documentation to back up all transactions. We will be able to determine if this is being enforced by assigning personnel to make regular checks on these documents that will need to be approved by a superior. Third we have is safeguarding of key information. This control has to do with access to key information, and this control specifically will act as a safeguard to secure access to payroll. The information will only be accessible to those who need the information to perform their duties and will be monitored and checked regularly by management. The password to access these files will also be changed every month or upon the departure of an employee to prevent unauthorized access. This will also prevent anyone who can access the information and ideally prevent fraud and data breaches. We will determine that this is being enforced by having the owner of the company be the person to change the password and keep track of who has authorization. The fourth is reconciliation and review. This control will require an accountant on the team to review the accounts to make sure there are no major discrepancies and to correct them if there are. Once this process is complete, a superior will be required to double-check the accountant's work and then sign off with the date. This will prevent letting any major errors slip through and will make the auditing process easier. It will also help hold employees accountable for their work. We will be able to determine if this is being enforced by regularly checking the signatures and dates of both parties. The fifth will be assigning a designated reviewer for bookkeeping. This control will require an experienced employee to be designated by the company to do a weekly review of all checks and other similar transactions. They will then provide a list to a superior for review and check for accuracy. The initial employee will be trusted to find any errors with these transactions and then submit them for another review. This control will prevent inaccurate money movement that will eventually cause discrepancies with reconciliations. This will also be helpful in identifying any possible fraud or incorrect information. We will be able to determine this is being enforced by following up with both the employee and the superior in charge of signing off on the reviews to ensure that they are being done. Let's recap. There are a lot of things that I've learned this month that I could include here, but to keep this short, I will just name a few. The first thing that I learned that stuck with me is pictured here, and it's what credits and debits do to different types of accounts. For example, debits increase asset accounts but decrease liability accounts, but credits increase liability accounts and decrease asset accounts. This knowledge was helpful in creating a successful balance sheet. I would also like to point out that learning what the different financial statements were and what was on them was very helpful, especially in Assignment 4. Being able to bounce between the balance sheet, profit and loss statement, and statement of cash flows to help calculate the ratios that we learned was easy after I knew what was on each and what information each provided. Week 3 was a little bit slower, but knowing what internal controls were and how they are used to tighten security and ensure fraudulent activity is avoided will undoubtedly help me in my future career. Week 4, bringing it all together, really helped everything hit home. Being able to piece everything together really gave me a sense of accomplishment, and for that, I want to thank you. I would also like to add that with my wife being a full-time accountant and have been doing this for the better part of the last decade. She was thrilled to watch me put all the pieces together and do a little bit of what she does on a daily basis. So again, thank you.